welcome to Business Daily. I'm Lee-Jun in Seoul. Let's get started with a look at today's highlights. The National Pension Service is examining the latest rescue plan for Daewoo Shipbuilding as the date for maturing debt fast approaches in April. There are growing concerns that the Korean economy might face economic turmoil in April due to a number of unpredictable variables. We have these stories and more coming right up. Korea's business sentiment among manufacturers improved for the third straight month in March, boosting optimism that the economy might be headed for a stronger recovery. Our Kim Ji-yeon starts us off.
Business sentiment among local companies inched up for the third straight month in March. Data released by the Bank of Korea on Wednesday shows the sentiment index rose 3 points from the previous month to 79. It continued its winning streak from December last year. By industry, business sentiment among companies in chemicals, electronics, and automobile sectors rose the most with the upcoming releases of new smartphones and a recent pickup in exports. However, a reading below the benchmark 100 still means pessimists outnumber optimists, meaning the Korean economy is not out of the woods yet. Industries engaged in petroleum refining, rubber, and plastic said they remain pessimistic about business prospects as consumption and employment figures remain sluggish despite recovering exports. Recent data by Statistics Korea shows the rate of increase in retail sales fell more than 2% in January from the previous month. The number of people employed in the manufacturing sector also decreased by 5,000 last year from the previous year to less than 4.5 million. This despite recent trade ministry data showing exports jumped more than 20% on year in February. It was the fourth straight month exports had gone up. Kim Ji-yeon, Business Daily.
And another massive bailout scheme is now on the table for one of Korea's biggest shipbuilders. But whether it will go through depends heavily on one of its largest bondholders, the National Pension Service. Our Oh Soo-young has the story.
Will the world's second largest shipbuilder be granted another lifeline? The National Pension Service has requested more information from Daewoo Shipbuilding and Marine Engineering ahead of a meeting on Friday where it will discuss whether or not to partake in a bailout scheme. The $6 billion rescue package is largely backed by the state-run Korea Development Bank, the company's biggest shareholder and creditor. Its success largely relies on securing an agreement from other corporate bondholders on debt-to-equity swaps and rollovers. The proposal suggests out of a total of $3.4 billion in debt, $2.6 billion be converted into debt-to-equity swaps with a ratio of 50 or 80%. The rest would be given a grace period of 3 to 5 years. All eyes are on the National Pension Service, Daewoo's biggest bondholder. It holds 43% of corporate bonds maturing next month, worth around $170 million. Watchers believe the agency will likely go ahead with the plan, considering past investments as sunk costs, but it is expected to tread lightly.
NPS is feeling the heat due to the Samsung merger scandal where the final decision was reached without following principles and was affected by external influence. So if it takes the initiative to unveil its transparent decision-making process in this case, it would help dispel public distrust of the pension service. Requiring extra data from Daewoo can be seen as a part of that effort.
Daewoo is currently the world's second largest shipbuilder by revenue, but due to a fall in global demand for vessels, coupled with other industry-wide difficulties, the company's finances are barely keeping afloat. It has already received $3.68 billion in a rescue plan in 2015, but has failed to beat its liquidity crisis. Without the latest bailout scheme, it will not be able to pay back the $395 million worth of bonds set to mature on April 21st. Daewoo Shipbuilding's creditors will convene in mid-April to reach a decision on the debt-to-equity swap and rollover plan. If the proposal falls through, the company will have to take on a debt workout program and go into court receivership. Oh Soo-young, Business Daily.
And moving on to markets, to give us a look at some of the key movements in the market today, we have our Business Daily's markets contributor Choi Jin-seok joining us on the phone. Hello, Jin-seok.
Thanks for having me.
All right, so how are things looking on today's market?
The Korean equity market didn't move much in today's session. The Kospi rose by 0.17% to close at 2166.98, while the Kosdaq followed with a 0.2% uptick to close at 613. The Kospi market opened the session with a slight uptick once rising above 2170. However, the index soon gave up early gains as institutional investors unloaded large amounts of shares for 3 consecutive sessions. By sector, technology, steel, and payment providers were good, while auto, financials, securities, and construction companies performed weakly.
Now, Samsung's unpacking event to unveil its new flagship smartphone models is considered one of the most important events for this week. So how are share prices of related companies moving so far?
The company's share prices have risen for 2 consecutive sessions, reflecting high expectations for the new flagship models. Today, Samsung Electronics enjoyed a 0.7% rally, and most Samsung Group shares, including Samsung SDI and Samsung Electromechanics, joined the positive trend. Meanwhile, Samsung Electronics is also the stock that foreign investors have recently been selling aggressively. Until yesterday, foreigners had unloaded Samsung Electronics shares for 5 consecutive sessions. This means investors are now in profit-taking mode ahead of an important event rather than seeing the company's outlook negatively.
And the foreign exchange market still seems to be one of important market factors. So do experts call for further gains in the value of the Korean won?
Exactly. The Korean won has been appreciating, particularly against the U.S. dollar, as the Federal Reserve signaled gradual interest rate hikes and foreign investors bought large amounts of shares on the Korean market. Experts expect the won value will rise further in the near term, and some even think the exchange rate between the Korean won and the U.S. dollar could fall below 1,100 won against the U.S. dollar. Hana Financial Investment and SK Securities both say the rate could fall further, with the U.S. Treasury Department set to unveil a list of currency manipulating countries in April. This has been Choi Jin-seok for Business Daily.
Exports of Korean cosmetics to China jumped by more than 50% in the first 2 months of the year, despite Beijing's unofficial sanctions on Korean goods. Data released by Korea Cosmetics Association on Wednesday shows that Korea sold $270 million worth of cosmetics products to China in January and February, or 51.6% more than in the same period last year. Of all global importers of Korean cosmetics, China accounted for 41.5% of Korea's cosmetics exports in February, an increase of more than 7 percentage points from January. Industry experts say that while Korea's cosmetics exports have been strong, local sales have dropped due to a sharp decrease in the number of Chinese visitors in recent weeks. Earlier this month, China ordered its travel agencies to stop selling group tour packages to Korea as part of a series of retaliatory measures against Seoul's decision to host a U.S. missile defense system THAAD. And the THAAD measures seem to be affecting the real estate market in some parts of Korea as well, particularly on largest island off the coast of the Korean Peninsula. Our Lee Ju-young has more.
Jeju Island, famous for its natural surroundings, slow pace of life, and Chinese real estate investors? Just last year alone, rich Chinese investors showed a voracious appetite for land on Korea's southern resort island, buying in roughly 2.6 million square meters worth of land. That's about 3 times the volume purchased by Americans and about 24 times that of Japanese buyers.
As the Chinese economy keeps growing, investors are turning their attention to foreign real estate. This is further prompted by Hallyu and the recent housing boom seen in Korea.
In fact, apartment prices grew by the fastest pace on Jeju Island, rising nearly 14% on year in 2015. This, of course, is all before Korea's decision to deploy the U.S. anti-missile system. Since then, the Chinese government has issued an unofficial group travel ban to the country, highly affecting Jeju's property market, one that's profoundly dependent on Chinese tourism and investment activities. According to the Ministry of Land, Infrastructure and Transport, home sales on the island dropped nearly 23% last month compared to the same period a year ago. This is in drastic contrast to the 7% rise seen across the rest of the country. While specific data has not been released yet, market watchers say the dip may largely be due to a drop in demand from Chinese real estate investors.
Regardless of size, even 40-year-old apartments cost the same as homes in the northern Seoul area. But now transactions have plunged and rentals are slow.
Experts say that if the diplomatic row over THAAD continues, profitable properties located in Seoul, like high-end office towers and hotels, will be affected as well. Lee Ju-young, Business Daily.
In light of these developments, rumors have been building that the Korean economy might be in for some trouble next month with a number of uncertainties ahead. But the government is confident that won't be the case, although the possibility is still weighing on people's minds. To tell us more about some of the risks and the positive drivers at the other end of the spectrum, our Kim Min-ji joins us in the studio today. Hi, Min-ji. All right, so we've talked about this April economic crisis before, and the discussion seems to be ongoing. But how have perceptions changed, if at all?
Well, authorities say there's little possibility, but it is a given fact that the country is surrounded by a lot of uncertainties at home and abroad come April, which has raised speculation that they could trigger an economic crisis. Take a look.
The Korean economy faces a slew of uncertainties next month. For starters, Daewoo Shipbuilding and Marine Engineering, one of the country's biggest shipyards, has debt worth over $380 million due in April. There are concerns it will not be able to meet its deadline amid a slump in new orders and a delay in ship deliveries. A rescue package worth over $5 billion has been proposed, but it remains to be seen whether all its creditors approve it. Failure to reach an agreement would most certainly mean court receivership for the company. On top of that, the U.S. Treasury Department could designate Korea a currency manipulator in an upcoming April Forex report, which may also include China. Korea was put on a monitoring list last year due to its sizable current account surplus and bilateral trade surplus with Washington, which topped $23.3 billion, fulfilling two of the three criteria the U.S. uses to determine unfair currency policies. Another headache stems from China's apparent retaliation over Korea's ongoing deployment of the THAAD missile defense system. Beijing has been imposing a series of unofficial sanctions on Seoul, including suspensions on Korean retail stores operating in China, tougher limits on Korean imports, and a ban on group tour packages to Korea. Local think tank IBK Economic Research Institute says, in the worst-case scenario, Korea's losses from the THAAD row could amount to $15 billion, which would pull the nation's growth rate down by 1.07 percentage points. The projection is based on the assumption that Korea's exports to China are affected by the retaliatory measures and that Seoul loses half of its Chinese tourists. The country also faces a snowballing household debt pile of over $1.3 trillion. According to the Bank of International Settlements, Korea's household debt to GDP ratio stands at 91%. A figure over 60% typically has a negative impact on spending, and over 80% takes a toll on economic expansion. Consumption has been on a slide for 3 months now. All eyes are now on the Bank of Korea to see what move it makes with its monetary policy in next month's meeting. But with the U.S. on track to continue raising rates, it's stuck in a limbo, neither being able to follow suit due to weak growth, nor able to cut rates due to concerns about climbing household debt.
So we have all these uncertainties, but the Korean government has brushed off all such concerns.
Yes, you're right. And the general consensus is that the Korean economy is strong enough to fend off these risks. Finance Minister Yoo Il-ho had early on said that the country has low possibility of falling into an economic crisis despite rising concerns.
Although there are concerns about a crisis in April, in reality the possibility is low. The assessment of our economy remains positive, with global ratings agency Moody's keeping its credit rating for Korea at its current level of AA2.
Most experts are also on the same page, breaking it down by some of the variables. They say there's a low chance it will be listed as a currency manipulator as Korea steps up communication with the U.S. to explain its currency and trade policies. And that tensions could ease as relations may improve under a new administration in Korea. And the country is working to pull out all the stops to keep Daewoo Shipbuilding afloat for now.
And are there any other positive factors that could cancel out such uncertainties?
Well, the recovery momentum in the country's exports are adding to those hopes. Outbound shipments had really weighed on the economy until last year, but it seems to be a different story now. Korea Customs Service says the country's outbound shipments came to $27.3 billion during the first 20 days of March, up almost 15% on year. The rise in exports was led by increased shipments of petroleum products and semiconductors, and prospects remain rosy for this year at least.
In the first half of the year, we may continue to see double-digit growth. It comes on the back of a base effect as well as improved economic conditions in the US, Europe, and emerging markets. In the latter half, growth is expected to slow but remain in positive territory.
Now, some risks exports may face are the potential of increased protectionist sentiment from the U.S. and the possible renegotiation of the Korea-U.S. free trade deal, which experts say the Korean government will need to keep close tabs on. The Korean government will also need to step up communication with Washington and take action against trade sanctions from the U.S. if Korea is designated a currency manipulator.
And what are some of the things that the Korean government should pay closer attention to in the near future?
Well, going forward, at the minute, the current government needs to focus on risk management and ensure a swift transition. Experts say that there are hopes of more effective economic policies with the new administration coming into power in May.
The new economic team will have to put efforts into creating new growth engines in light of the Fourth Industrial Revolution, as well as carry out economic policies in a consistent manner. As for risk management, they need to speed up the corporate restructuring process and make sure it doesn't weigh heavily on the economy.
On top of that, experts say it's all down to creating quality jobs and expanding income so people can spend more and reduce the household debt problem. And in the wake of issues stemming from the big two, the U.S. and China, it will need to boost further cooperation with them to minimize the fallout.
Well, April is just around the corner, and it looks like we have a lot of stuff to keep our eyes on.
That's right.
Thank you so much for coming in today.
No problem.
British Prime Minister Theresa May has signed papers to officially begin the process of pulling the United Kingdom out of the European Union. The letter, which was signed Tuesday evening local time, will be hand-delivered to European Council President Donald Tusk later on this Wednesday. That notification would trigger Article 50 of the Lisbon Treaty, at which point Britain will have 2 years to negotiate a new trade arrangement with the 27-member bloc. The EU is the largest economic bloc in the world, from which Britain has voted to leave last summer in a bid for sovereignty. The UK currency has been falling against both the euro and the US dollar. The sterling has weakened by some 20% against the greenback since the June 23rd referendum. U.S. President Donald Trump has signed an executive order to undo former President Barack Obama's climate change regulations. Now, these actions come as Obama's Clean Power Plan has been quite unpopular in Republican-run states and among companies that rely on burning fossil fuels. Our Nuaram reports.
Trump's new decree suspends more than half a dozen measures enacted by his predecessor and boosts the use of oil, coal, and gas. The measures include reversing a ban on coal leasing on federal lands and undoing rules to curb methane emissions from oil and gas production. It also reduces the weight of climate change and carbon emissions in policy and infrastructure permitting decisions. Speaking as he signed the order on Tuesday, accompanied by coal miners, Trump said it would put an end to the war on coal and job-killing regulations.
We are lifting the ban on federal leasing for coal production. Third, we are lifting job-killing restrictions on the production of oil, natural gas, clean coal, and shale energy. And finally, we are returning power to the states where that power belongs.
The move triggered a swift backlash from a coalition of 23 states and local governments, as well as environmental groups. They called the decree a threat to public health and vowed to fight it in court. Trump has long denied the existence of climate change, and during the campaign, he vowed to pull America out of the Paris climate deal agreed in 2015 by some 200 countries. However, since taking office, President Trump has been mum on the Paris Agreement, and the executive order does not address it. Noaram, Business Daily.
A lawyers' association here in Korea is pushing to make paid parental leave mandatory for men. Although there's already a parental leave law on the books, hardly any men take advantage of it. So the group is working to gather support for the new legislation. Our Kim Jong-soo takes a closer look.
The Korean Women Lawyers Association is planning to propose a law making at least 60 days of paid parental leave mandatory for men. The association made the announcement at a symposium in Seoul on Monday.
Childcare should be a right for both females and males. We have evidence to believe that parental leaves are not being used to full effect because of office politics and peer pressure.
The group hopes some of the leading presidential candidates will take up their proposal, though they admit the chances of the legislation actually passing are slim.
The presidential election is coming up, so we are obviously looking to capitalize on that. We will make sure this movement doesn't fizz out like the usual campaign pledges.
Under Korean law, male employees are technically granted up to a year of unpaid parental leave, and employers can offer paid leave if they want. But the practice is far from accepted as a social norm. Of the 89,795 people in Korea who took parental leaves last year, only 8.5% were men. But the lackluster use of parental leaves is not the only problem. According to a report from the Korean Institute for Health and Social Affairs on Monday, the compensation for parental leave in Korea amounts to only 29% of the person's income. This puts Korea in 19th place, with countries such as Chile, Austria, and Germany taking the top spots. The amount of paid parental leave guaranteed by the government in 2015 was 12.9 weeks on average, or 90 days. That's 5 weeks shorter than the 17.7 weeks on average granted by the 34 OECD member nations. Experts say that improvements in the country's parental leave policies could help lift Korea's chronically low fertility rate. The rate, which measures the number of children a woman will have in her lifetime, is 1.25. Putting Korea at 220th out of 224 nations. Korean law requires that employees apply for parental leave separately from maternity or paternity leave, but the Korean Women Lawyers Association says it is proposing other legislation that would combine the two applications into one. Kim Jong-soo, Business Daily.
And that wraps it up for today, but we'll be back tomorrow with more of the day's top business stories, so don't forget to tune in then. Thanks for watching, and goodbye.